Target out with first quarter results. Courtney Reagan joins us now with more. She's fast.
Yeah, I'm very fast. So, looks like a pretty disappointing performance from Target for the first quarter. Revenues, $23.85 billion, missing the estimates for $24.27 billion. Adjusted earnings come in at $1.30 per share. It's unclear if this is comparable to consensus. We think it is, but there's this favorable litigation settlement, pretty large actually, that analysts most likely were not expecting. Comparable sales fell 3.8%, much worse than the 1.9% expected drop. Digital sales did grow 4.7%, driven by same-day options. Target is lowering its sales guidance to low single-digit declines compared to consensus for 0.3% growth. It's also cutting and widening its earnings forecast for the year between $7 and $9. Now, on a media call, Target CEO Brian Cornell wouldn't say definitively if the retailer had raised prices due to tariffs or would in the future. He did say Target has many levers and mitigation strategies it would employ first, raising prices as a, quote, last resort. Chief Commercial Officer Rick Gomez explained mitigation should offset the majority of tariff pressure, but added the retailer would adjust prices if necessary. Now, Cornell called out, quote, ongoing pressure from discretionary categories, 5 consecutive months of declining consumer confidence, tariff uncertainty, and the reaction to its upgraded DEI program, it's called Belonging, as drags on the quarter. Traffic and transactions both fell. Margins were compressed from higher markdowns and higher cost of digital fulfillment. Valentine's Day and Easter, that did drive sales, and that limited Kate Spade collaboration was the strongest in a decade. Cornell said, quote, we're not satisfied with these results. They're focusing on factors within its control. Target is setting up a new program led by its COO, Michael Fidelki, that's tasked with moving faster and accelerating growth, or re-accelerating growth, rather, in the business. And Christina Hennington, as well as Amy Tu, are exiting their executive roles as a part of that move.
Can I just tell you how fascinating it was, not just to watch you speak about this so that we understood it, but if you watch the stock as it was going, I mean, this is like algos. First, on the original back of the news, I don't know if you saw it. It was like up 5%.
But then down.
For a hot minute, it was like up 5% because the algos must have been reading the initial headline, probably with this legal settlement in there. I don't know. In
their favor, yeah.
Then it moved into the red. Now it's back. Look, it's now back up 3%.
Yeah,
or 2%. And I know it's early.
No,
but
I'm not saying that. I'm saying you know what the high was?
Oh, yes, life is relative. I'm not.
No, it was 260. This thing is sold out beyond belief.
Yeah.
This is that was only a couple years ago. That was in 2021. This thing is battered, beaten, bruised. Shareholders are, they're crying uncle. I don't know what they'd have to say to get this to go down more at this point. Think about that. What is 260? Is that?
Oh, you just think this is like you can't fall off the floor situation.
Exactly.
Okay.
That's all. I mean, 260. Think about it.
Isn't that a great phrase, by the way? I should give credit.
Off the floor.
It's my mother-in-law.
Did do what?
You can't fall off the floor.
No.
Yeah.
I like that.
No. But and in the same period, same business, right? Sort of. Walmart. Look at that stock.
Yeah, and we've sort of asked these questions too to the Target executives, and they're like, look, we don't know Walmart's business like we know ours, but we do know that our discretionary categories are much larger than Walmart's, and so that can account potentially for some of this, and we know those categories have been pretty soft.
Can we talk tariffs for a second?
Yeah, please.
And just the articulation, communication.
And the language very precisely from some of these retailers.
So we have Lowe's this morning. We had Home Depot yesterday. I was saying Home Depot got all the headlines it could possibly want, at least if there's an audience of one in the White House, which was to say, effectively, we're eating the costs and it's not going to get passed on to customers. So I'm not sure that that's actually accurate.
Exactly. And they were very careful in repeating the same phrase. We generally intend to maintain pricing across our portfolio.
Right.
Very careful phrasing, because I think if they are unable to do that, they would like to keep pricing. And yes, they have done all of these mitigation strategies and diversified their supply chain, but hasn't everybody else?
Right.
And that was just sort of my question.
Well,
Home Depot still imports about half from other countries. Now, they say in 12 months, no one country outside the U.S. will represent more than 10%.
Right.
But if they import 50%, and Walmart is only importing a third, and they're bigger, and also do all these strategies, yet Walmart says we can't absorb it all, how can Home Depot? That's just
right?
Like, how does the math?
Okay, so I haven't lost my mind.
No.
Okay, what about Lowe's?
So Lowe's, when I looked at that release, they did not really say anything in
They
there
said nothing
about the tariffs.
That's what I was looking at right now.
Yeah. So the call is at 9 a.m. So we'll see what they have to say. But the analyst community had thought that tariffs would likely hit Lowe's more than Home Depot. They didn't say anything.
And they affirmed their guidance.
Yeah, and to be fair, Target doesn't really mention tariffs in their release as well. But luckily, as a member of the media, we were able to get through to them and get some more clarity on the bigger picture things that are not included in that release right away, so we can give some context to the numbers so that those stock moves can be more accurate.
There we go.
Looks like there might be a trapdoor to the basement in your floor.
You can fall. You can fall off the floor, apparently.